self-directing is the antidote to the roller coaster stock market. Okay, this is the solution if you're over the stock market going up and down and worrying about it. Welcome everyone to the Directed IRA Podcast with Matt Sorensen and Mark Kohler. Today is kind of an interesting topic because Michael Burry from The Big Short, the guy who shorted the housing market, is giving us a signal again. And this time he's signaling you should self-direct your IRA. You should get your money out of the stock market. You should self-direct your IRA. I think that's what he's saying. Yeah,
he's definitely sending a message. Frankly, he's so pragmatic and tactical.
Yeah.
I don't know if he has a political agenda or a message to send, except he wants to make a bunch of money. So if you haven't heard, it's been all over the news. He is shorting the S&P 500 and NASDAQ with $1.5 billion, 90% of his assets. And a short means that he is betting that the market's going to go down, not up. See, the average person, if you're not familiar with this, may say, oh, I'm going to buy $100 of stock and hope it goes up. Well, when you short a stock, you can say, well, I'm going to buy a position that says if it goes down, I make money. And you can bet against the market. And he did that
just
in the Big Short.
Just recently, he did that in the housing market.
With the housing market.
And now he's doing it again on the general stock market, which he said is the S&P 500 and the NASDAQ. And a lot of people are like, what is this signal? Is this guy going to be right again? And they're freaking out. Here's our message. Many of you know this at Directed IRA.
Is this a new message, Matt? Or is this the same damn drum we've been pounding?
This is the same damn drum we've been pounding. But for some of you, this is a new message. And this is the message. Invest in what you know. Invest in hard assets. You don't have to have your IRA or 401k 100% invest in the stock market. In fact, you could take every penny of it and invest it into hard assets like real estate or private companies. This morning, I was at the Scottsdale Realtors Association teaching them how your IRA or 401k can own real estate. The lady at my table was like, I just talked to my financial advisor about this last week and I was grilling him about how I could do this. And they're like, nope, you cannot do it. And I'm like, oh my gosh, Wall Street, seriously, you can own these assets. And we want to go over why you might want to do it. I got some great ideas here. But this is an opportunity for some of you that may have been sitting in the stock market to reassess your situation.
And it's not that she can't do it. It's that her advisor can't do it. It's called selling away. They can be fired from their position at any of the large broker dealers for suggesting or pointing her in the direction of how to self-direct. Deep down, this advisor that this realtor went and met with, they may have believed in what she was trying to accomplish, but they can't even say it. It is that jacked up. So what Michael Burry is also saying is all assets. It's not just gold, silver, real estate, notes. It can be startups and companies that are in alternative industries you might have some insider knowledge on. It is not insider trading to buy alt assets. You can. Isn't that amazing? We are insider trading. Well, that's if you're buying and selling public stock with public information. But alt assets are companies and venture capitalists that are raising money to do oil and gas or alternative energy or, again, real estate or development. And you're like, oh my gosh, I want to jump on board. You can take your retirement account and do that. And by doing that, you're hedging against Wall Street, just like Michael Burry.
Yeah, and let me just give a couple of examples, and I always love, we have the client that owns the Mexican soccer team and these other assets that I love just mentioning. But think of that. What happens to that investment in a recession? It doesn't go up and down in the stock market. Do people not watch Mexican soccer when that happens, or football, whatever you want to call it? What about rental properties, right? I mean, if you're buying the right rental properties, the rents don't go down. The value might go down, but if you're buying properties that cash flow, you're still fine. All right? And remember, your retirement account, we're investing for the long haul. So self-directing is the antidote to the roller coaster stock market. Okay, this is the solution if you're over the stock market going up and down and worrying about it. And I want to hit 3 reasons why you might want to do this. Besides what the stock market's doing, I want to give you the 3 main reasons why.
Okay, now before we go to those 3, I want to address something Matt said a moment ago. And that was, he said, all of you can invest in all assets. Well, there is one caveat. if you are currently employed with a company and they're offering a 401k and I want you to get the match, that's 100% return. Put your money in, get the match. That's a no-brainer. Even if you're hedging against Wall Street, 100% return on the money you put in, you're going to be okay. But should you put more money in that? Maybe you find a separate retirement account that works better for you. You can have two 401ks, one in your small business and one with your spouse's day job, or you can have a self-directed Roth, a self-directed IRA, a self-directed SEP. So you can have two retirement accounts. But for those of you that are currently employed with the company, they're going to control where that money is invested. And let me guarantee you, it's going to be in Wall Street. So there may be opportunities if you're vested to do some rollovers or to get some of that money out. You can meet with one of our professionals at Directed IRA to help guide you through a 403B or a 401k where you're currently employed. There may be options. But for any of you out there that have this old IRA, this old 401k, this old retirement account that's just sitting there languishing in the stock market, listen to Michael Burry.
Yeah. Well, let me hit these 3 reasons.
Okay.
Why? Okay, we kind of mentioned the first one, invest in what you know. If you know real estate, why are you buying mutual funds with your retirement account, right? There's $33 trillion in U.S. retirement accounts. A lot of us have a little sliver of that. Why are you investing your own money in stuff you don't even know? You're buying a mutual fund or an ETF. You don't even know what it is. You can't even tell me what it owns. And you've got hundreds of thousands of dollars invested in it. If you know real estate, you love real estate, you believe in real estate over the stock market, this is an option. Wall Street's not going to give it to you. They're not going to lay it up for you. You got to go find it out and get to a company like Directed IRA where we'll actually let you do this.
I love it.
But if it's not real estate, like I've had a bunch of dentists that came through and invested in a startup that was like a mouthpiece thing that you'd wear to sleep. And it's like some new design. They have a patent on it.
I'm in on it. Is it stop snoring?
Yeah, what's it, sleep apnea or whatever?
Yeah, you're not going to. Well, send it over. I want to see it.
All right.
I'm in.
All right. I mean, so like so these guys are investing in what they know, right?
Yeah, I love it.
So find those things you have. If it's small business in your community that you want to invest to, that you want to back. I mean, these are the things you can actually do that are tangible, that are real, that you can really inspect, besides some like thing off that seems so intangible, like an ETF or a mutual fund.
I love it. I love it. Now, by the way, I want you to know I'm squeezing my stress ball here.
Ooh, does that stress you out?
Well, I don't know. I'm just feeling better.
Okay.
You know,
right.
Maybe you don't need to be stressed to squeeze a stress ball.
Okay.
Be it, it's preemptive.
Yeah. Preemptive strike.
Preemptive strike against an stress. I'm just going to start
any stress that might come my way, don't even try.
Don't even try. I got my stress ball right here. Okay, now let me comment on this. We did a workshop about a month and a half ago called the Alt Asset Summit. One of the presentations I was allowed to give, I had to fight my way onto stage for this, by the way, is how do you invest less than 25 grand? Some of you are like, yeah, that'd be nice to buy real estate, Matt. I mean, yeah. But I don't have freaking 500 grand sitting in an IRA where I can go out and do killer real estate deals. Well, you don't have to have 500 grand. There's a lot of real estate projects where you can partner with other IRAs in your family circle. You can create your own LLC and network with the other real estate investors. And I did a presentation at the Alt Asset Summit. And spoiler alert, I'm going to tell you how you can get all the recordings. I did a presentation on, I think it was 10 to 15 ways to invest $25,000 or less. It was 15. And Turo businesses, RVs, equipment rentals, livestock, small real estate projects, syndications with that are Reg A, where you can get in for even less. You don't have to be an accredited investor. We went through all these at this summit. So if you go to altassetsummit.com, you can get the recordings. It's so affordable. How much is it for the recordings?
I think it's like $199 or $149. I can't remember. $199. Yeah, it's a bargain.
Gosh,
yeah,
it's a bargain. We covered all sorts. We had probably 15 different experts come through for a day and a half and teach different ways that you can invest your money outside of Wall Street. So if you're looking for ideas, $149, holy crap, that's dinner out this weekend at a steak restaurant. Yeah. Put your money in a good spot and learn some ways to invest.
Love it.
altassetsummit.com.
All right.
Okay, what's number two?
Number two.
Why? This is the whys. Why do I do this?
Because we can do it tax-free using a Roth account.
Oof.
You want to be strategic in your investing. You got opportunities that could be significant in the short term or long term, and you want to pay no tax on it. Use a Roth account. Our smartest investors, some of our biggest accounts are clients with Roth IRAs, some Roth 401ks too. But they're investing and they're hitting home run deals, and they're finding the opportunities where they can get massive returns in a tax-free nature, and they're doing it in a strategic way. So remember, the Roth account grows and comes out totally tax-free. If you think about investing, one of the biggest costs to being a successful investor is taxes. Okay, it cuts into what you get actually really make and spend at the end of the day, and the Roth cuts through that because it's totally tax-free.
You know, I have no idea what you just said. You just had me at tax-free.
Tax-free. That's all you need to know.
You complete me.
Yeah, that's
you
all
complete
you
my
need to know.
financial plan. Tax-free.
You're Jerry Maguire.
Yeah, I'll run around the couch, give you a big hug.
Is that Jerry Maguire? You
Yeah,
okay,
damn
Jerry
straight.
Maguire. Okay,
Yeah,
all right.
yeah,
Okay,
yeah.
all right.
Yeah, Zeg Gwiller. Oh, Cruz.
Renee?
Yeah, Renee. She's freaking awesome. So, and it really is kind of funny that it's that simple. When you can build your wealth tax-free, tax planning becomes a lot easier.
Yeah.
So we should be building this bucket, and you can do it with a Roth, and it's so simple. And we've got so many podcasts in the history here. If you're finding our podcast for the first time and kind of enjoying, hopefully, our style and what we're trying to say, go back to the original first 10 podcasts in our series from 2 to 3 years ago, and listen to the ones on using the Roth chunking, Roth converting. We've got almost 200 episodes now. So get in there. There's a lot of great content that'll help fill in the blanks here.
Yeah.
Okay, the number 3 reason why I should get out of Wall Street.
Number 3, hard assets. Okay, real estate doesn't go to zero, unlike your Silicon Valley
It's true.
bank
Even
stock.
piece of crap real estate's always worth something.
Yeah, there's always a value to it, you know, and so, or certain other hard assets. Some clients invest in precious metals or other things like that. You know, everybody invests in what they know and what they like. We don't tell you what to invest in. We're just saying you have options. And your retirement account, so many people have been brainwashed by Wall Street and the insurance industry to think, oh, I have to buy a stock, bond, mutual fund, or an annuity because that's what the broker-dealers and the insurance companies sell. No. You can invest in this stuff that you believe in, that you think can weather the storm better, that's going to grow to have a bigger retirement account when you hit that magic age of 59 and a half. And it can be hard real assets. It doesn't have to be something you click on a computer that is so intangible and you're just crossing your fingers, watching the stock market roller coaster, freaking out.
I love it. All right, I'm not going to give a reason why you should do this. I'm now going to give you a call to action. Listen to what Michael Burry did. See what the message is. A lot of people out there are talking about not the world's end, but a recession. You know, a thing that could happen, which happens repeatedly and it's cyclical, that we're going to have a downturn in the value of the stock market. That's all. He's not saying we're going to, you know, lose everything and the company's going to trash. It just means the stock market's going to go down for a while. It's okay. We've got other podcasts on how to recession-proof your business. Get over to Main Street Business Podcast. We talk about how to prepare for this sort of thing. But watch what's going on, and here's the call to action. It's simple to get educated on this and take control. You can take control of your retirement. I love your example at the beginning. This woman that was a realtor went to her broker and sold the riot act that she was crazy, that she could not do this. She now knows better. She knows there's a message out there that is different. Listen to that message. Something inside of all of you while you're listening to this podcast is telling you, you can do this. And folks, it's not that hard. We're here for you at directedira.com. We have a hotline that you can call or text or type on the line and get support immediately on what your options are. The law firm, you can have a consult with a lawyer that will help draft an LLC with your retirement accounts, with your family, your mom, your dad, your spouse, your kids, and you can pool your money and do something you believe in. Take action, get educated, watch the Alt Asset Summit videos. For $150, you can really learn so much. Dang.
They just like close that out amazingly. Can I just leave one last message? I hate to go after that.
Wow. Well, thank you.
Okay.
It's a stress ball. Here, squeeze that while you talk.
Was that the magic?
I think it's a stress ball.
Okay. All right. I get it. I see.
Can you feel it?
All right. Here's a trap. This is the trap. I know some of you might be listening thinking, I'm just going to go to cash and do nothing.
Ooh.
That is the worst decision. Any of the great investors will tell you that, trying to time the market, get out and just go to cash and jump back in when it goes up. That's not what you should do. Instead, reassess. And what we're saying is consider all the options. And with your retirement account, it's not just stocks, bonds, and mutual funds. It's all these other assets that people make money on outside of their retirement accounts too. And so just have a broader perspective. Know you have more options. Don't feel trapped with your little sliver of the $33 trillion that's in your own retirement account and being stuck in Wall Street right now. So you've got options. We're here for you.
Oh, I've got one more thing.
Okay.
You inspired me.
All right.
Remember, a 401k is not a bad.
Okay.
I need the ball. I need the ball. Okay. Yeah. Throw me the rock. Throw me the rock. All right. I'll take it to the hoop. Remember, the 401k is not a bad thing. A lot of people think, oh, I don't want a 401k. They're bad. No. We're not saying that. The 401k is simply a vehicle. Do you have junk in the trunk? Let's get rid of that junk. So if your 401k has got junk in the trunk, let's change it out. Now, I'll repeat what I said earlier. For those of you that have a day job with a W-2 and a 401k, we offer it here at our law firm and at Directed. I want all my employees to put in enough to get the match, because we will match it up to 4% of their salary, 100%. We're going to put in whatever dollars they put in, even if there is a recession. That's an incredible rate of return. Always do the match and then step back and think about what next. And that's where you can look at these alternatives. And if you have that old IRA or old 401k from a prior employer, those are fodder. Those are ready to go. They're at your disposal. So do the matching out, meaning step back, get out, look around before you get back in.
Yeah, love it. All right, thanks everyone. We'll be back next week with another amazing episode of the Directed IRA Podcast. Until then, stay calm, self-direct on.